We were discussing depreciation, and meaning of depreciation we have discussed that it is a gradual and permanent decrease in the value of the asset, and it is also a process of allocating the cost of the asset over its useful life. Various causes we have discussed. Then why we should charge the depreciation? What is the importance of charging depreciation? What are the objectives behind charging the depreciation? That we need to know. Now see the first point. For ascertaining the true profit and loss. See, depreciation is also a loss to you. Depreciation is also an expense for you. That's why if you will not adjust that in your profit and loss account, you will not be able to get your true profit and loss. Suppose I have purchased a thing, an article I have purchased for rupees 500, and I have sold that article for rupees 800. Obviously, I can say that I have earned rupees 3, I have earned rupees 300 as profit. But in that whole process, if some fixed assets have been used, obviously, until and unless I charge that expense also from my profit, I will not be able to get my true profit because that is also my expense. So if I want to calculate the true profit and loss, actual profit and loss, then I should also deduct amount of depreciation from uh, my profits. Then second is for showing the true and fair view of the financial position. Now I again give you an example. Suppose uh, I have purchased a building for rupees 1 lakh, and in 1 year, suppose its useful life is 10 years. So obviously my 1 year expense of that building will be 10,000. Now even after 1 year, if I am writing that same building for rupees 1 lakh, then somehow I am misleading the reader of the balance sheet, because now actually my building value is only 90,000. And suppose in that situation I went to bank for taking a loan, and I am saying that in security I have a building of rupees 1 lakh, but the actual value of the building is now 90,000. It is not 1 lakh. So your balance sheet also should also state your true financial position. It should give a true picture of your assets and liabilities. For having that true and fair view of your assets in the balance sheet, you should deduct the depreciation. Only then you will be representing your true value of fixed assets there. So for that purpose, depreciation need to be charged. Then third one is to ascertain the accurate cost of production. Now cost of production is such thing that when you will be knowing it correctly, only then you will be able to add your profit and you will be able to decide your selling price. Suppose your cost of production is 90 without charging depreciation, without adding depreciation to that cost. And on the basis of that, you have decided that, okay, I will sell it for 120. And then you are thinking that I will be earning rupees 20 per article. But somehow your depreciation is also rupees 10, which you have not added to that cost of production. So ultimately, you will be earning only rupees 10. So 50% of your profit only you will be earning actually. 50% of your estimated profit. So this will become a big mistake if you will calculate it on a large scale. The companies are selling huge amount of goods. So if you want to calculate your actual cost of production, you should add amount of depreciation also, that because ultimately your machines are involved in that production process. If you will not add its cost to the cost of production, it will be a great loss for you. To provide funds for replacement of assets, obviously how it will be providing funds for the replacement of asset, I will give you a very practical example for that. See, if suppose I have sold an article for rupees 100, I had purchased that article for rupees 80. My purchasing cost is rupees 80 and I have sold it for rupees 100. Now my profit is rupees 20. But I am deducting depreciation also. So out of 20, suppose I deduct depreciation rupees 5. So my net profit will be 15. But actually, if you see the picture clearly, if you will write the example on the paper, you will be able to understand it properly. I had purchased an article for rupees 80 and I have sold it for rupees 20. So it means 20 rupees I have earned extra, and that will be in my pocket. Obviously, I will pay rupees 80 to the supplier and I will get rupees 100 from my customer. So obviously at the end of the day, 20 rupees will be in my pocket if you will see the difference practically. But here I am saying that I have earned a profit of rupees 15. Now where is that rupees 5? That is also in my pocket, but that 5 has been differentiated as depreciation. So over the time, suppose on a daily basis you are doing the same thing again and again for 30 days. So in 30 days you will be collecting 150 rupees for depreciation, and that collection of fund, because in actual it is in your pocket, but you are saying it is not my profit. So you are collecting that fund which you will need after some time for purchase of new asset. If you have purchased suppose a machine for rupees 500 and its 1 month depreciation is coming 150, that way I am giving you an example so that you will be able to connect it properly, and you have saved rupees 150 from your profits by stating only understating your profits. Your actual cash profit is rupees 20, but you are saying that my profit is not rupees 20, my profit is rupees 15. That 5 rupees you are again and again keeping aside as depreciation. Over the time, it will be getting accumulated and it will become rupees 150. And in the same manner, in 3 months, it will become 450. So you will be about that cost. You will be reaching to that cost again after 3 months when the machine will be scrapped. You will be able to purchase a new machine out of your funds which you have generated from your profits. So this way, depreciation will always help in providing funds for the replacement of asset. I hope you have got this point. Let 1 minute. So for the calculation of true profit and loss, for the presentation of true financial position, for ascertaining your cost of production, for replacement of your assets, for these things, charging depreciation is very important. You cannot avoid that. Now next importance is for avoiding overpayment of income tax. I took the same example that I have earned rupees 20 as my profit. Without deducting depreciation, my net profit is rupees 20. And suppose I am paying income tax on that. Now suppose 10% income tax rate is there. So obviously I will be paying rupees 2 of my net profit to the government of India. So, but in actual, when I will deduct the depreciation, my profit will become 15 and 10% of it will be 1.5. So in this manner, because depreciation is also your expense, it is also a part of your cost of production. That's why it will reduce your profits. And when your profits will be reduced, obviously your income tax liability will also reduce. Otherwise, if you are not deducting depreciation, you will be paying some amount of extra tax. Means you will be paying some amount as extra which you are not required to pay. Even you will be paying that amount also to the government as tax. So it will help you in avoiding the overpayment of income tax. Now next is factors determining the amount of depreciation. Which factors will help you in calculating the amount of depreciation? How to know the amount of depreciation? Till now you have learned only the meaning of depreciation and you have done journal entries also. But the point is that how I will be reaching to the amount of depreciation, that by this much amount my asset has been reduced. So first thing will be the total cost of the asset, that will help in knowing the amount of depreciation. Then second thing is estimated useful life of the asset, means total life of the asset. This will be generally informed by the manufacturer of that asset. that manufacturer will generally tell how much is the life for that asset. Then third one is estimated scrap value. Estimated scrap value means that after its useful life, what value you will be getting for that useless asset. Now, some important points are there which you should keep in mind while calculating these three factors. Total cost means purchase price plus freight, transportation which you have paid for that asset, that will also be added to the cost. You have paid some installation charges and some other charges may also be there. So whatever payment you are making for the purpose of only and only making that asset ready to use, some labor charges may be there, some installation charges, freight charges, packing charges, some tax, anything may be there. So whatever you are paying before using that asset to get it ready for use, that all cost will be added to the cost of the asset, and that will be called as total cost of the asset. This point should be clear. Then second thing, estimated useful life. I have already told that estimated useful life will always be informed by the manufacturer. Estimated life will be always informed by the manufacturer. And estimated scrap value. Estimated scrap value will be also known as, meaning I have told you, meaning is that the value which generally we sell that asset. Obviously, suppose you have purchased a machine for rupees 100 for 1 year. After 1 year, suppose its value is rupees, means it will not be having any value practically, but obviously when you will sell its scrap, you may get rupees 10, you may get rupees 15 for that machine. So that value is called scrap value. And sometimes in questions you will get other names of this scrap value. It is generally called residual value also. Residual value, or sometimes it is also called breakup value. Then one more term is there. I will let you know for that also. So means various terms are used for that. So don't get confused. These all are same. So these three things should be clear in your mind, because on the basis of these three things only you will be able to calculate the depreciation. Okay. Now what are the methods of providing depreciation? See, various methods are there. In fact, some of the methods are not mentioned here. Straight line method, written down value method, NVT method, depreciation fund, insurance policy, revaluation method, depletion method, machine hour rate method. So these all methods are used as per the circumstances, because each and every industry has its own circumstances, its own nature. So the selection of the method depend upon the industry, upon the user of that asset, what are its circumstances, how he is using, and what which method out of these will be appropriate for him to charge or calculate the depreciation. But in your syllabus, only straight line method and written down value method will be there. These two methods are there. So these two methods we will be learning, but tomorrow onwards. Today we have discussed the theory part only, and I will request that please go through this theory part. It is very important for Viva purpose. Your practical will also be there, and for knowledge purpose also. The method we will start tomorrow only.